More than 900 delegates attended the 5th German Africa Business Summit GABS 2024 held in Nairobi, Kenya. The plenary session was addressed by Kenya's Prime Cabinet Secretary Musalia Mudavadi and the German Vice-Chancellor Dr. Robert Habeck.
We as a continent must move away from retrogressive legislation. If you want to be a shareholder in a company, whether it is local, whether it is a foreign investment, the correct door to use is to actually put your shares on the table.
9 of the 20 countries that have the fastest growing economies are coming from Africa. The German-Kenyan trade relation increased steadily over the last years. 930 German companies are in Africa and invested in Africa and employ over 230,000 people in Africa. These are good figures, but not so good that we could not do better. This investment, the German investment, is only 1% of German foreign investment, and the steady growth rate does not let us oversee that the potential for more is there.
Discussing the Africa Business Horizon, Equity Group Managing Director and CEO Dr. James Mwangi debunked the notion of an Africa risk in financing business.
The current geopolitical challenge we are going through seems to be setting a reset of the global economic and financial structures. We're seeing particularly Africa fronting the need for consideration of affordability and risk pricing of financial flows to Africa. And as a result, this has positioned Africa pretty well. We have seen early signs of responses where there is moderation on what used to be called African risk.
Dr. Mwangi shared the secret to building resilient businesses in Africa, saying country risks are peculiar to respective countries.
The reality is there is no Africa risk. There is country risk. Each of the 54 countries is a different risk to an investor. So we are seeing that increasingly. Various alternatives are being brought on the table, whether these countries that are seeing the opportunity to become financial powerhouses, and that diversification of finance, challenging the old model with alternatives, is giving Africa a chance in terms of choice.
The head of ODO BHF Corporate Banking, Florian Witt, said foreign banks are not leaving Africa because of risk.
The reality is that the European banks are leaving because they don't have an advantage anymore. The banks have grown bigger. Equity is 14 billion balance sheet. It's a balance sheet like ours. So what shall I tell them as what I have for an advantage here? They have an advantage of have thousands of people on ground, training them, having a foundation here active. So they're really deep into the country. So they are doing a better job than a European bank can do. And that's why they are buying them. Not because the banks in Europe think the risk is too high.
If I look at the equity group, the returns on equity are at about 24%. When we look at cost of capital, probably below 20. So what are these risk premiums that you keep attaching to markets in Africa that we don't see, yet statistics give a different view? And opportunities like what we have today are quite important. Enable African banks to tell the story and to sell the story of why it's good to do business in Africa, what are the returns in Africa. Creation of the German desk by Equity Group was one inspired by that narrative.
During the plenary, Dr. Mwangi discussed opportunities for finance, saying agriculture accounts for 30% of Africa's GDP, while renewable energy is emerging as a capital-intensive investment opportunity.
Across the region, we are very big in manufacturing and value addition, because that's the transformative sectors, particularly, and the biggest opportunity on the African continent. Agriculture contributes 35% of the GDP of Africa, so it's a huge opportunity. Renewable energy will be a huge consumer of finance because it's an intense capital investment opportunity.
The Equity Group CEO demonstrated how Equity has been successful, saying it is because of a strong partnership with the West based on a development approach.
Equity Group Foundation is significant to allow de-risking and capacitation in sectors that have no proven track record.